Welcome to the program. Today we're going to talk about the market, BHP and Santos, changes to superannuation, and a game changer in the life insurance industry. I'm Marty Switzer.
I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. We've only got 2 minutes and we're going to spend no more than 2 minutes on each topic. First one, Pete, let's talk about the market. Tough trot at the moment on the back of falling iron ore prices. The housing market, what's happening with the Fed, what's your view on what's going on?
My biggest worry is not the fact that share prices are falling. My biggest worry is trying to time the right time to get into this market, because I think it's another buying opportunity. I suspect that the market's going to actually go up when they cut interest rates in December. I think it's all baked in, but it's just the timing thing that worries me.
So you don't think the Santa Claus rally will be ruined by a possible increase in interest rates?
No. The worst case scenario would be that Santa Claus. I do think that the market, the classic case was today. It was down, not by much, and it finished up. I think most people are starting to recognise that the US economy is doing a lot better than expected. Only an external curveball that shocks everybody. Yeah, black swan. Yeah. In fact, I ran past the black swan in Centennial Park the other day, and it worried me.
You're good at the black swan.
What do you think, Paul?
Well, I think I think Peter's right about the US. The US wants to finish on a high, right? I think you can say the US market.
Love the Yanks.
It's more likely to have a Christmas rally. Our market, look, our fund managers, our institutions, our press, everyone is so bearish. I think while the dollar is...
Anton Tagliaferro on the street yesterday, he was very bearish.
Yeah, look, I think...
Anton is always bearish.
Yeah, well, while the dollar is sort of hovering lower, I'm not sure we're going to get much of a Christmas rally. There are going to be some buying opportunities, but you've just got to be patient in this market. And I don't think we've seen, really great opportunities. So I'm sort of just hanging out for the market like everyone else.
What's your view on the Fed? Do you think they'll raise?
Yeah, I think the Fed will raise, and I think the US will have a bit of a rally. But we need a catalyst. That catalyst may be enough for our market. Maybe we'll eventually, we'll get a bit more confidence going. But maybe won't be till next year.
Tagliaferro is Maltese for bear. Go on.
Housing prices at the moment. Obviously, the clearance rates were down on Monday or Sunday night. Monday, bit of negativity around banking stocks. There, your views on that, Pete?
Well, I think it's a good thing that the house price momentum is slowing down. Everyone's worried about bubbles and rubbish like that. It was a boom. Now interest rates are staying a little bit highish. It's going with the ball. It's a healthy thing. In terms of banks, I think banks are a good buy at this point in time if you're prepared to wait 1 year or even less. But look, there's just so many of my colleagues in the media love to jump on the negative stuff, and I just think
it's because it's easier a lot of the time to write a negative story.
That's right, but they've been wrong. The reality is the stock market has kept going up. Sure, it goes up and goes down, but it's historically going up. They're wrong about the house prices creating a bubble that we see a crash. There's not going to be a crash. They'll just come off. They'll rise and slow.
Before we get the bell, Paul, quick comment.
Housing prices, no impact on bank shares whatsoever. It's all nonsense. Look, the only risk for bank shares is unemployment. That's if you start to worry about bad debts. It's not going to happen. I think the bank shares are probably good value, but at the moment, they haven't got much else to sell. So, unfortunately, 40% of the index, people are bearish, everything gets sold off. They're probably looking better value than many other parts.
I'm thinking Buffett here.
Yeah. That was a long 2 minutes. Moving
along.
Next
when
topic.
They want to be sold.
Okay, so BHP and Santos. BHP has had a very tough week. It's the lowest price in 7 years, sold off about close to 6% on Monday. Paul, I'll start with you. Is BHP a buy now?
I don't think you should rush into BHP. I'm going to write about this next week. But look, unfortunately, these things tend to have a habit of being more expensive and taking longer than everyone expects. Now, in fairness to BHP, this is only 3% of their earnings.
Okay, so we're talking about the trouble of the Brazilian dam.
Yeah. But, mine could be close to 3 years. What worries me is that BHP may use this as an excuse to kill their progressive dividend policy. Now, you and I have talked about that at time. Shareholder suits, I'd be lining up if they killed it. This might be the catalyst for saying, sorry, we can't do it. Yeah. And that, I think, would be a negative.
That couldn't serve them well, though, could it, from a share price perspective?
I don't know. I mean, look, I'm sort of losing a bit of confidence in BHP management. I thought the other thing, as un-Australian yesterday, was to increase the terms of their debtors to 60 days. BHP should be getting a huge brickbat from everyone out there in Australia at the moment. So I'm not going to rush in and buy BHP shares. Sorry, I'm just not feeling very charitable BHP this morning.
Yeah, I don't want to be racist, but remember, Andrew Mackenzie is a Scot, and my grandfather's a Scot. And they're terrible with money, which is great for the bottom line, but it's going to create the bad kind of feeling.
I think there's going to be an opportunity at BHP. I'm just not sure it's just yet, because I just don't know. I just think these things tend to get worse than we all expect. And
I want to buy BHP these low levels. I'm with you. I don't know when I want to do it. It's just like Woolworths.
Okay,
I want to buy Woolworths at low levels.
Santos,
Okay.
trading halt, raising some money, issues with falling energy prices, got some debt to pay off. There has been talk about Suitor's Scepter taking out Santos. What's your thoughts on that as an energy as a play, Pete?
I'll try and be objective here. I hate Santos. You know, it's a company I hold. I wanted to dump it at low prices. I hung in there. Thank God there's people wanting to buy it. I hope someone comes on and buys them. The people who've been there have been complete nincompoops.
New CEO.
Yeah, haven't been helped
coming
by
on
the
board.
energy prices. Yeah, it's good that you see us. Look, the opportunity for me will be eventually I'll sell out of Santos and buy a company you can trust.
Paul, let's move.
yeah, I'm writing about this today or tomorrow. I mean, I think Santos is now almost a pure oil play. I don't think there's going to be much takeover premium there. So if you like oil, buy Santos. If you don't like oil,
Okay, we'll move on. Before I get into trouble. Next topic: changes to superannuation. Very, very topical at the moment. Occupying the front pages. A number of proposals out there. Paul, you didn't get to finish last time, so I'll throw back to you. I know you got some views on what's going on. Give us your thoughts on what's happening.
well, it's all about equity
and fairness.
Fairness.
Yeah,
That's
he loves that
buzzword
line.
coming out- fairness coming out of Canberra. Look, there are a couple of proposals. One is probably going to get the light of day, and that's for essentially everyone to pay the same tax on super going in, and that's 15%. At the moment, in terms of additional contributions, you make the salary sacrifice contributions. Some people get a tax benefit of up to 34%. Some people only get a tax benefit of 2%. So chances are that'll come together, and I think that'll get the light of day. There's another crazy story around today, which is around sort of lifetime contribution caps.
So you put so much in.
You only can put so much in. I think, again, being done prospectively, not retrospectively, I'd say almost impossible to administer. I'd like Treasury to tell me whether they think I'm going to live to 70 or 100. Because I reckon if I'm going to live to 100, I need to be able to put more in for a lifetime than if I can live to 70. But put that to one side. I hope that proposal gets killed. There's lots of dumb things here with super. There are too many goodies out there, ACOS, other think tanks, politicians, got no idea how
Hate
super
those
works.
goodies.
Leave it alone, guys, right?
Pete?
Yeah, my biggest worry is they demonise the rich, and the rich did exploit superannuation, but governments allowed them to do it. They just logically did what they're supposed to do, given their position. What this is going to do is hit the middle class as well, and the middle class are the people who are prepared to
Help grow the
save
economy.
more and be self-reliant when they retire. This is going to punish them, so they might end up with a lot less when they retire.
They have said they won't hit anything that's already in.
Yeah,
So
I think
prospective.
nothing's going to be retrospective. That's one
Retrospective,
good positive. It'll all be prospective.
Yeah.
But look, I think there's a couple of obvious strategies. We keep saying the same things. There are going to be changes. So look, how that pans out. Look, we've got a crystal ball.
tuned.
Stay tuned. But there are two things you need to do.
Stay
at the
subscribed to the Switzer
moment.
Super Report.
Okay, so one is start to split your contributions, right? And that'll take account of a number of these situations. So look, either
Bring your partners.
spouse splitting, or potentially if you're making non-concessional contributions, put them into your low incomes or your spouse's name, right? So get a more even balance of super. That's the most obvious one. The second one, if you are eligible, take a transition retirement pension now, because I still think that's going to be come back on the card tax. And then thirdly, look, contributions might be capped. So over the next sort of 6 to 9 months, make sure you're making the contributions.
Yeah.
The best case, if all these or some of these recommendations went through, when would it likely to take place? It'd be a couple of years, right?
Well, no, I don't know. They've said that they take it to an election, but that's the Abbott sort of policy. Who knows what might happen? Because again, to do this stuff and to make changes, then say.
But even if they take it to an election, it's still could be a year away before it gets implemented, right?
Correct,
It could
correct.
be, yeah.
So
They won't do it before the election.
The election could be
you
6
might
months.
need to. Sometimes they make the announcements and say, as from this date, we're going to do this and take this policy. So you've got to plan on that.
Two really
You should be
important
doing some
points.
things
The
now,
two
I
really
think.
important points for me is that
Make them quick
if
for the
they
bill
want
to
to punish everybody in Australia, the parliamentarians have to be punished.
Yep.
They should be put on the same superannuation as
That's
everybody
the idea
else.
of equality
They
and
won't do
fairness.
that.
And secondly, it's going to be great for our business because financial advisors will be required to help them beat the system.
Good point. Moving on, a game-changing play in the life insurance industry, possibly. So MLC have launched one of the country's biggest life insurers, owned by NAB, which the insurance part of that business is being sold off, have decided to launch a fitness watch. And the idea of that fitness watch is if people actually do the fitness activity that they need to do, and they can actually prove it by showing on the watch to their insurer, then the insurer will agree to reduce the premiums by up to 10%.
So if you do the man challenge of Adam McDougall and you're fit as a fiddle, you get lower insurance.
So if you've got an insurance premium at the moment, so you work on the rough guide, $600 per 500,000, you got $1.5 million of insurance. It's going to cost you somewhere between $1,800 and $2,000. That could be a 10% discount, $180 to $200.
Yeah, look,
is this a gimmick or is it a good option?
There's something in that. I mean, I noticed also one of the competitors was advertising last night for a similar type of deal where they'll give you the watch away always for free. So
well, the watch is probably worth the same price as the discount.
Yeah, I mean, look, I think it's more a gimmick, but it's not necessarily a bad gimmick. You know, I mean, obviously it's doing the right thing.
Yeah.
It's almost like a marketing cost. I think the other thing. So I mean, you know, Marty, if you could take advantage of this stuff, you should do it. It
is encourage health and wellness too, which is a
encouraging
positive.
health and wellness. That's a positive. So if you're into that stuff, why not? Why would you try to get the best deal?
I also love the fact that often in family relationships, the wife becomes the treasurer. But if she can financially say to her,
you're not talking personal experience, Peter, right?
Yeah, I am. But if the wife can say to the irresponsible husband that there's a financial benefit in you not eating crappy food and drinking too much, that's a good idea, I reckon. So,
or the real tight person could give the watch to their fitter partner, get them to do the workout, take that information to the insurer and get the discount. But that could get them into trouble, and that might be null and void if they.
Speaking of life insurance, there's one thing that was announced last week, got very little traction. The government finally finalised its position around the reforms to how advisors could charge commission on life insurance.
Okay.
And that got announced last Friday, in sort of that throw-out time, but the government's largely accepted some of those recommendations.
John Trowbridge.
There's some transitional periods, but essentially the upfront commissions will come down to 60% over a couple of years, and the ongoing commission will be no more than 20%.
And this is all part of the Trowbridge review?
Yeah, so that actually should be a saving for people buying life insurance. Your advisor won't be getting so much of a commission to get you into the product.
Yeah,
that's actually good for consumers in the long term.
Yeah, sure.
So shop around when it comes to life insurance, I think is the message.
And ask how much commission they're getting. It's just as I said, there's a lot of vested interest in that industry.
That's all we've got time for. I'm Marty Switzer.
I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.